This entry model will 10x how you trade, and it's by identifying traps in the market. If we can identify traps in the market, we can take highly probable entries day after day after day with a simple, repeatable strategy that can be followed and mastered in just 2 to 3 months by even the average beginner. So without further ado, let's get straight into the presentation here. Trap entries. So what are they going to help us do? Firstly, they're going to help us to avoid losses. And of course, avoiding losses is a huge thing in trading because the people that are becoming unprofitable are actually taking way too many losses. If they can be avoided, if you go through your journal, you can actually see, hey, I could have avoided this one, this one, this one, this one. And you can see very quickly that, hey, I actually have a winning strategy here. I'm just losing all of my trades. That shouldn't be losses. If I take these losses out, I might be a winner. Of course, having a repeatable setup is super important as well. The same thing over and over, bang, 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 confirmations are met, we take the trade. That's how trading should be. Of course, having a nice risk to reward, I go for a nice 1 to 2 because I understand my win rate. Increasing your win rate is also important, but it's also about understanding what your win rate is. And of course, as a beginner, you want to increase your win rate and not so much your risk to reward, but then you can kind of find a balance where I've found a 1 to 2 risk to reward with a 50% win rate means that I'll be very, very profitable. And that's all I go for in the markets. Before we jump in, I know you won't want to watch till the end without knowing who I am and that I'm legit. So let me tell you. First and foremost, founder of FundedX prop firm. Almost 2 years now we've been running this prop and it's going super well. And we have a community of hundreds of thousands of people that have taken our challenges, which is amazing. 196 countries. Of course, I've been trading for 8 years now. 8 years in the markets allowed me to have the life of my dreams. I own 2 supercars, got a new RM, which I have on now, nice pink strap as well. I have, 650K just in watches, USD. And this is all through trading. Trading has allowed me to really just become the person I wanted to be, with the confidence, with everything that I ever wanted was thanks to trading. And so I give this game everything. First thing you want to understand here is market direction. So market direction, what does that mean? Well, we can see here, we have an uptrend from this low. You can see price starts to make higher highs and higher lows. Higher high, higher low, higher high. That's what an uptrend is. A sideways trend or a consolidation is when price is more or less trapped in a consolidating zone where it just keeps on, going basically sideways for a long time. Consolidation period. And a downtrend is when we start to get bearish price action. So price making high, a lower low, lower high, lower low, lower high, and lower low. So to sum it up, an uptrend is when price is making higher highs and higher lows, and a downtrend is when price is making lower highs and lower lows. And of course, consolidation or sideways trend, price is just going sideways. Here we go, market direction. So we want to look for trends, we want to look for pullbacks, and we want to look for price consolidating. This is going to tell us what the overall market direction is for the majority of retail traders and where they're looking to take the market next. So your goal is to identify the market's direction and where it's headed, pretty much. Again, this is a 4-hour time frame, so just breaking this down again, we have a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then we have a break of structure, price then makes a lower low. So it shifts bearish, lower high, lower low, lower high, and lower low. Next thing is spotting liquidity zones. So we want to look above and below price for clusters of liquidity, basically places where stop losses and pending orders likely sit. Again, if we have price above liquidity zones, clusters of liquidity, we were going to see things like equal highs, multiple touches of a resistance, and unbroken supply zones. If price is below or below liquidity zones, as we could call them, have equal lows, demand zones, and obvious support. So if we look at this area here, this chart here, we have a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So what has price done? Well, it's created this. There is a demand zone here where price is tapping into. We also have relative equal lows across here. Price shifts bearish, makes a low, lower high. This is where those equal lows are formed. Low, high, low. So in this case, we have the majority of people shorting. We have price tapping into a demand zone. We have bearish structure, bearish order flow. Again, there'll be a supply here. So what we can actually do is, if we see If we see price break this support level, no one's really thinking to buy. What we're going to have above us is this: trendline liquidity, supply zone that matches up with the trend line, and we're going to have this area being your 61.8 Fibonacci retracement. So many ways people would actually be going short there. So what do we look for price to do? The opposite. We look to buy through that liquidity. That's how we actually trade and have our high probability entries. So again, why? Price is drawn to liquidity like a magnet, and it will act as a magnet. Because why? That's where all the orders are sitting. So when we can identify this, we can have really high probability entries consistently. Number 3, what you want to do is you mark out your support and resistance zones. So again, supply and demand zones are support and resistance zones. So if you're marking out supply and demand, for example, a supply zone, it's a resistance level. When price taps into that, reacts, we have a lot of people who start to short. You also want to mark out your highs and lows. These are very important. It shows where a lot of the liquidity lies above and below. 5-minute and the 1-minute time frame shows where traders are entering. So that's when we find the manipulation, find out where their stop losses are. And of course, the highs and the lows are stop loss orders. So if price is bearish, the stop loss is above the previous high. If price comes in, does a manipulation over supply zone and goes higher, takes out all that liquidity at once. So you're starting to see how this thing works. These are the points where you have liquidity sitting, meaning that the price will come back to that point once it triggers a signal, right? So for example, let's look at this price action here. We have a low after making this high, low, lower high, lower low. So we have a bearish range, but look above. We're going to have a supply zone here where everyone's going to sell, but look here, a big resistance level. So more often than not, price will come up into this supply, fake, and then shoot through that resistance. And that's the trade that we want to be taking every single time. So now the trap setup. When price is retesting support and resistance, it's a building up liquidity in the market. And the general retail trader, resistance level, they sell. Support, they buy. Institutions will often push price against them to take their stop losses. So basically, what they're doing is going the opposite way of retail traders. So why don't we do that? Doesn't that make so much sense? So again, here's an example. Price tapping into a resistance zone here. And again, everyone's going short based on this break, based on price action being bearish. But oftentimes what we will see is price come and hunt that level. Confuse everyone, take out all the stop losses. We see this time and time again. So now, number 5 is want to look for an entry confirmation. So, entry triggers can be liquidity sweeps. If it's a support level, wait for the sweep of liquidity, get into a buy. It could be a break of structure. For example, a bullish break of structure is actually when we can actually look to sell. And of course, multiple retests of a zone. Always look to have 2 to 3 confirmations minimum, because these are going to be kind of your entry triggers that get you into a trade. Here's a liquidity sweep entry. So we have this low, equal lows. We have a sweep of liquidity, and then this is where we can enter as price pulls back to go up higher. Even though we're bearish in the structure, we can go higher and we can take all that liquidity out. Break of structure. So again, if we are wanting to buy and we see price come down, make a lower high, lower low, lower high, lower low, lower high, lower low, there may be a little point of liquidity across here, like a little support level that just got taken. So again, this could be an entry trigger. Or we could actually wait for price to come and give a reaction from this supply to trap all the traders short again. What we could do then is buy and take all that liquidity out if buys are our buyers, which again, we'll be going against, say, 15-minute, 1-hour structure at this point. And again, multiple retests. So breakout traders will enter a trade here. Now this is a breakout working, but a lot of the time it doesn't. So a lot of the time what price will do is it will push up, and the breakout traders will buy as the price pushes above a resistance zone like this. Their stop losses are going to be here. What we often see is price do that. And if we don't, we push out and we break and retest, oftentimes what we see here is that the breakout traders that trade that strategy will wait for a buy here. Stop losses are here. So you get something like this, like that. Just trapping everyone out, taking everyone out at once. Also shifting structure bearish, which entices a lot of people to get into sells. Trade management, also super important. Stop loss must be at the invalidation point. Where you're going to be wrong on a trade, you place your stop loss. And you want to move your break even once price runs in profit. Of course, taking profit are liquidity sweeps, which will be 2R for me, or it will be key zones. Previous high, 15-minute structure point, support taken, resistance taken, whatever you kind of see as a good liquidity area or a good target for your trade. So now I'm going to show you how to actually do this on the charts. Now, this is exactly what I was just going through, which is amazing, great example. We have a high, a low, lower high. We'll mark this out. High, low, lower high, lower low. Price returning into a supply zone here. Great. And then what do we get? Break of structure, push down, so high, low. Then we have this area high and low. So you can see that a lot of time frames are bearish. We're getting deep retracements, filling the last zones. So we have a lot of people that are starting to short this. Now, if we look at this price action from here to here, we have a nice clean bearish range with a supply zone above. What people don't realize is we have a resistance level across here. Now, price at the minimum should return into this zone, but based on what we know as a strategy, price should eventually take that high. So my trade, which I'm about to show you now, was a 1 to 2, but you could have held this to easily a 1 to 3 trade. Again, just my personal strategy. Now, as price taps into this resistance zone, we have market structure shift bearish. So there's your bearish shift, then price returning into a supply. So that supply sits at a resistance level. This is the manipulation we want to see. Now, 1 minute time frame was my entry cue here. So what I needed to see was price come into the supply zone, and then you can see this candle here, nice big bearish engulfing candle, trapping traders short. So they're entering, most traders are entering a short like this. Now their stop loss is either going to be here or here. So either way, we're looking to hunt their stop losses. Let's just say they had a conservative stop loss and they were targeting this low for a nice 1 to 1.5. What does price do? Boom, hunts that liquidity. After that, you can see we just shoot up to take what? This high. And this is no accident. This is exactly what we see time and time again from price, is that we will literally go and hunt liquidity very, very fast. You can see shortly after we hit a full 1 to 2 target on this trade. It was a really nice one. There we go. Hit. So nice 1 to 2, closed out. Again, this was a live trade that we took with the community, and I advised them, once price hits this zone, takes this high, we move our stop loss to break even. When it did it, we moved break even. 2 minutes later, basically at target, I said, look, close if you want. We're at that 1 to 2 target already, which is amazing. So as we can see, like the market moves like this, it moves in waves. This trade ended up doing like a 1 to 15, 1 to 20, but it's not my strategy to keep holding these long trades. I just want to get in and out of the market like that and take these high probability trades consistently. But guys, thanks so much for watching this video. I hope you enjoyed. Hope you got a ton of value from it. Make sure you like, comment, and subscribe, and I'll keep this coming for you. Thanks so much.